Welcome to the show. I've got a special guest I'm going to be bringing on here, but I think we've got to go over some important dynamics in the market this week. I actually am going to share and break down Goldman Sacks' opinion on the data that's going to come out this week, exactly how many rate cuts they see us getting this year. We're going to get the Fed dot plot on Wednesday. And since we are so close to the end of the year, I think the market's going to choose to interpret that this isn't guesswork anymore. Whatever they share on that dot plot is very likely what we're going to get. And so that gives the market a ton of opportunity to essentially know what the Fed's going to be doing and sort of price in everything the Fed's committing to doing by Wednesday for the end of the year. And then from that point forward, it's going to be all about the jobs data, and inflation will still matter. I'm going to go over that with you guys today. I'm also going to talk about Bitcoin. Bitcoin, it got rejected at 60K, right? That was somewhat expected. There was some interesting sentiment reports out that I'm going to just share with you guys. And I'm going to tell you what Bitcoin has to do next, both what level it's got to stay above and what level it's got to ultimately get above for us to be in a full-fledged bull cycle moment for Bitcoin. And we're going to cover triple witching. I'm going to get my guest's opinion on that. But on September 20th, we have triple witching, which is an event that absolutely adds to normal volatility. And so between the Fed and triple witching, there's one thing I am 100% certain of going into this week, and that's pretty max volatility. And we're going to talk about the impact that's going to have on options with my special guest. That's our game plan today. Earnings is coming to an end. This quarter's earnings are coming to an end, but we still have FedEx reporting Thursday, and that's one that I've actually enjoyed trading in the past, and we're going to look at that this week. Let me bring on my special guest to say hello. This is Investing with Ashley. Hello, Ashley. How are you doing today?
Wonderful. Thank you, Josh. It's an honor to be a guest on your show.
Are you, how's the audio, guys? Let me quickly know, because whenever I have a new guest on, I just want to make sure the audio is good for you guys. Thank you, guys. Juana Riddick is in the house. Preet is in the house. Kevin is in the house. Appreciate you guys all being here today. So, Ashley, how would you describe your investing strategy? And tell us a little bit about your page. And then we're going to dive right into some important information.
Absolutely. So my website is Trading with Ashley, and I have a YouTube channel as well. And I focus on something a little bit different. I focus on selling options. So I sell puts and I sell calls, and I operate the wheel strategy. And I have a lot to share with you on how it's a really good way to trade, especially if you're dealing with larger sums of money, or if you're like me, retired, and you need to create an income for yourself off of your trading funds.
I love it. I think this is an area, first of all, options scare people in general. And so right off the bat, they want to get into it, but options are a form of leverage. Actually, Wall Street largely looks at options as being a safety mechanism to reduce your capital exposure. And so how you trade options is kind of determines how risky of a play it is. But when retail gets in, they sometimes tend to do Hail Mary options. And so options get a bad reputation. But if you have a lot of knowledge, I think Ashley brings knowledge to the table. When you've got the right knowledge, options can actually be a more conservative way of playing your portfolio. Okay, so I'm going to just kick things off. Before I begin, I got a couple small announcements. One, this is the Stocks with Josh show. Guys, right off the bat, I appreciate everybody that hits the like. I know Juana Riddick, she hit the like right at the beginning. I appreciate everybody that did. If you guys are new to this page, please hit the like and subscribe. And I'll just tell you right off the bat, Ashley's definitely, coming into the fold of, me and my friends and all of us who are communicating with you guys on trying to help you build generational wealth. You're probably going to see her face pop up every once in a while. I am super pleased to have her on my show. We wouldn't just bring anybody to you. We bring quality people to you with knowledge that we think will actually change give you that advantage. And I'll tell you, what I love about getting knowledge on Wall Street is once you begin to really sow into yourself and do the hard work and have the discipline to lay the foundation, nobody can ever take that away from you. It permanently changes you. Now, some people just run everything like a lotto from day one, and they end up, sometimes they win, sometimes they lose. Ultimately, a lot of people get burnt out, and they fade away, and they walk away from Wall Street, and they say it wasn't for them. I know that you guys know that I believe that Wall Street is for everybody or anybody who will put the work in. Okay, I also want to talk about my buddy Stock Up with Larry Jones. I'm going to show you guys, I'm doing an event. Really, Larry's doing an event, and he's my buddy, and I'm going to show up for that event. It's called Music and Money, and it's right around the corner, and it's really an event that's just about sewing into people. This is not, any type of money grab. I think there is a basic ticket price to get in that's extremely low, and I believe that that barely covers the facility. But I know that Larry's heart is to fill that house. Now, I had plans. I've got travel plans and work plans, and I was like, as soon as Larry told me he was doing this event, I said, I'm there. I'm there. Just count me in. I'll rearrange my entire schedule, and I'll head out there, and that's exactly what I'm doing. October 12th. I'm leaving a link in this description of this video, and at the end of the video, I'll put it in the top pinned comment, and I'd love to see you guys. I'm going to do a micro flash fast course on technicals. I'm going to just share the big vision very quickly in whatever time that Larry gives me, and I'm going to lay out the roadmap for people who are really wanting to, who are afraid of technicals, and I'm going to share the simple beauty of technicals, because I think they're easy. People just need to be taught. They just need to have their questions answered, and I'm going to be doing that at Larry's event, and I'm super stoked about it. Okay, let me just quickly show you guys the that screen. I meant to have Larry's event up the entire time. So it's an event that's posted on Eventbrite, and there's a link in the top pinned comment for you guys. All right. So let's just break down some things. There's some questions that we have to answer today. Goldman Sachs predictions. What does institutional money say about this week? Are they saying buy or sell? Triple witching, September 20th, directly after the event. What exactly is it? What does it mean? And will it make things better or worse? And Bitcoin at 60K rejection. What's next? I will timestamp this live video after we get it posted. Okay. And after we do this show, and I'm getting a lot of intro commentary here at the beginning, me and Ashley are going to do an options intro class on the Discord in the university section just to help people, because we're getting ready to do the 3K to 10K challenge. And for some, they want to participate because they love the idea of turning 3,000 into 10,000, but they don't even know options. And so even though I don't think one segment by me and Ashley will bring you fully into an understanding of options, I thought I would throw one out so that we could get a quick refresher. If you guys don't know what the Stocks with Josh Discord is, it's the Chart Goat University. I'll also leave a link in the top pinned comment for that, so you guys can come over there. We're going to go live there directly after we finish this video. So let's just start off with triple witching. Here's the bottom line. This is an event that occurs 4 times a year, and it happens in the months of March, June, September, and December, okay? And it's not necessarily a bad thing, okay? There's the one thing that you have to know for certain is that triple witching increases volatility. Sometimes triple witching can actually lead towards bullishness. Now, if you do a sort of a classic standard view of the impact of triple witching, the months where triple witching has leaned towards bullishness, well, those basically were March and June, and the months, actually March and December, and the months where triple witching actually moved in a bearish way was June and September. And so we've got triple witching directly after the Fed gives us the interest rate cut on the September 20th, and so we've got to watch out for that. I'm curious, Ashley, how much consideration do you give to triple witching here in September?
Well, the name itself, witching, sounds negative. So
yeah,
I'm thinking of like Wizard of Oz. You've got your good witch and your bad witch. But actually, I, as an option seller, I love anything that increases volatility. So earnings will do it. If there's a big event coming up for stock, that will do it. And triple witching helps bring volatility up. And so I know that volatility increases when our options expire and there's a lot of movement. People that trade futures, that's when they go ahead and graduate to the next quarter's, when they're looking at their futures contracts. And it's also the same time that a lot of people have their third Friday of every month for their options expirations. When institutions do a lot of their large options, they will select that third Friday. And that's something that happens every month. But then when it coincides with what's happening on your triple witching, it amps up the volatility. And so when volatility rises, people are obviously taking out put options to protect their portfolio. They're buying puts, which is smart because you definitely want to protect if you have a larger position. Let's say NVIDIA, for example. If you have a lot of NVIDIA shares and you want to protect your position with all of this movement, you will buy a put to protect your portfolio. I'm on the other end of that trade, and I am saying I will be happy to take your NVIDIA shares off your hands, but I want them cheaper than what they're trading at today. And for that insurance, you're going to pay me money. And that's what I put in my pocket and go to the grocery store and buy my groceries with. That's the premium.
Wonderful. I love how you kind of explained a little bit of that. So when you're coming into this month and you're looking at triple witching, are you increasing the puts or the calls that you're selling because of the increase in volatility? Are you scaling back a little bit? How does this largely affect your goals?
So if you study the technicals for a stock, which you do that all the time, you're the goat at technicals. I'm an amateur when it comes to technicals compared to what you do. But if you study the technicals and you have decided that you would be comfortable owning a stock at, let's say, in my example, the bottom of the Bollinger Band. I don't want it at the top of the band because it's got very little room to move up. So I may say, I'll take NVIDIA, but I want it when it's at the bottom of the band because I want to enjoy the ride up the Bollinger Band because I want to enjoy all that stock appreciation. So if I define that level, let's say it's 110, and I say I want to buy NVIDIA at 110, then what I'll do is I will set aside the money. My broker will hold that money out and they will
Can
say,
you
we'll.
can you just for people who are really beginning, can you explain what that means? What you just said, because let's say you got $10,000 in your account and you are doing naked, selling puts. What does it? What you just said? They need to understand. Can you explain exactly what happens if they go to sell?
Absolutely. I'll go slower, like I taught my daughter here recently, so that it is a little bit easier to grasp. So, if you are agreeing as the put seller, let's visualize this. When you say selling a put, that's a weird word, right? But basically, what you're doing, Josh, is you are putting up the cash to buy a stock. And you must have enough cash for 100 shares of that particular stock. So in this example, if I've agreed to buy NVIDIA at $110, then I would need that cash in my broker to purchase 100 shares of NVIDIA at $110. So to make this trade, that money is going to be reserved in the event NVIDIA gets down to $110 at my expiration date, then I'll be put the shares for doing that, for putting up that cash and taking it out of circulation and securing somebody's portfolio that wants to ensure that they can at least sell their shares for $110 if things just start going south. For that, I receive a payment, and that payment is the premium. And so let's say, for instance, I'm looking at December, and I said if NVIDIA gets to $110 by my expiration date in December, I'll be paid $9 a share by someone to insure their portfolio. So that's $900 in my pocket. But the beauty of that is if NVIDIA settles in anywhere above my strike price, I get to keep that $900. And then the broker releases my cash to me to make another trade.
All right, so here's the thing that people are going to ask, though. So let's say it just absolutely capitulates and goes to $80. What's your risk, Ashley?
So my risk is I've agreed to buy NVIDIA at $110. So let's say it goes down below that. I will, if I don't roll the position, and that's another topic for another show, but if I don't roll the position and I just hold on to it, I will get these shares for $110. So I'll be pretty sad when I open up my broker after December 20th and I see that I own 100 shares of NVIDIA at 110, but they're just trading for 85. Like that's going to feel awful. But all I need is patience because I have those shares. And if I'm of the belief that eventually NVIDIA will get back up to 110, all I have to do is just be patient. Just like Warren Buffett says, be patient. And then when it gets back up to $110, no problem. Now I have all my money back. Plus, I have that $900 I got earlier. Now I can start selling call options against my shares, meaning I'll say, I'll give you my shares if they hit $120. Well, guess what? I get more premium to do that. Plus, then I'll be giving away my shares after they're already in profit. So, really, when you're selling options, if it's one, a quality stock you want to own, if you get put the shares, that's okay. You just have to be patient until the price catches up with the level you were put the shares at.
Yeah, this is a great conversation. I know that this isn't really where I intended to go. I'm normally pretty flexible. We'll get into some other things here in just a minute. But, there are people that held two stocks come to mind that people have been talking to me about ever since I got onto YouTube. And it's ChargePoint and NEO, right? There's people that bought $100,000, $60,000, $40,000, and they bought those shares and those shares just continue to drop for all those years since 2021. For 3 years, those have dropped. Now, the entire time, if they, personally, I think they should have sold them. But if they hadn't, one of the things they could have done to minimize their loss would have been to have sold calls on that position, and they would have collected that premium repeatedly, and they could have put that into more of their position, or they could have they could have done a number of things. But I wanted to open up this conversation because it's the education that's going to save you guys. And you're going to realize that you have more options than you knew that you had. Okay, so let's get into, we covered triple witching. I want to cover Goldman Sachs' opinion. So Goldman Sachs basically said that as they view it right now to their clients, they said the Fed's going to give 3 cuts. It's going to be no more than 25 basis points. The 50 is off the table, and they're going to do 3 cuts. It's going to be September, November, and December. Now, that's their guess, and they believe that once the dot plot comes out on Wednesday, they'll show their clients that they had guessed correctly. The other interesting thing is that they believe that after that, largely, the Fed has pivoted from his concerns regarding inflation, and they believe that that's correct, and that that inflation will largely continue to come down because there is some weakness in the economy that should put the worst of inflation behind us. And they believe that after we get these 3 initial cuts this year, that then the Fed is going to do cuts quarterly. So it'll be basically 4 more cuts in 2025. More gradual. And they said that those could be 25 to 50 basis points, but they'll come every 3 months after that. And they said that the Fed has definitely communicated to the market that he's more concerned about unemployment at this point than inflation. Now, they have a couple other thoughts on the retail sales that's coming out, and I think it's going to affect Tesla, and I wanted to cover that. But on that initial thought process, Ashley, in regards to your investment this week, how many new positions have you been opening or closing in anticipation of what the Fed's going to do Wednesday? How much has this impacted you right now?
Well, again, that volatility with all the question marks and all the excitement around whether it's going to be 25 or 50 and what really will happen after that, nobody really knows. There's 2 camps. And one says that 25, shows conservatism and that they think that the economy is strong. We're not in any big trouble. We can take our time. And as a result, the market will breathe a sigh of relief. Well, there's others that say if they don't do 50, then they are really going to throw us into a recession because they should have been cutting at this point already. So all those big fat question marks around what the reaction will be, causes that higher volatility. Well, I'm a patient trader, so I don't mind that that's the case. So to answer your question, I have been taking trades left and right. Me and my Discord members, we've been selling options. But here's the beauty of it, Josh. Because of that increased volatility, I can go super low in my strike prices. Whereas if I were to get any of these stocks at the prices that I'm selling puts at, I would be so happy. I'd be skipping along and saying, I'm going to be rich because they will be growing over time. Because as you know, the market has a tendency to go up over time. But it must be a quality stock in this environment. You would not want to be taking chances on ChargePoint or Neo or anything like that. You'd want a company that has defined benefits to it for holding it long term. They have a lot of cash on their balance sheet. They have shown that they can withstand a correction. And you ideally want to sell puts on stocks that everyone would run to for safety if in the event we did have a recession. Because if you're holding those stocks, well, all the better.
Yeah, so I just want to break down a little bit of what Ashley's saying. So guys, when the markets get more volatile, and that's how I led out this video, which is that both with witching and with the Fed communicating this week, we know that we don't know whether the markets are skyrocketing higher or lower. But we do know that there's going to be more fear and more volatility, more greed if it begins to pop. And we're going to get a lot of emotions this week. Because of that, the cost of options is going up across the board much higher. Now, when you're talking about the cost of options, when you buy an option, that's referred to as the premium. And so we have increased volatility. And what she's telling you is that she can go lower, and the premiums after this event settles out, they're likely to drop. And so it's a profitable time. In essence, she sells options, and a lot of buyers are coming to buy, to hedge, either because of greed or fear. They're coming to the market, and they're trying to hedge or buy, and she's getting top dollar for those options. After we get through September, things are likely to calm down. And that's the concern when you're dealing with implied volatility, is that even if you guessed the correct direction, the cost of the premium or the cost of that option might have gone through the roof during the volatile period. And then we get into October, and even though the stock, let's say you bought a call and the stock's running up $10, the premium could be dropping and you're not making any money. And so what she's referring to is volatility is on the rise, and she's a happy seller into that space. I want to just briefly, I didn't prepare this content for today, but I remembered that I had saved some notes on it yesterday. So last night we got some data from China. Their China overnight economic data, unemployment rate expectations was a miss. Retail sales was a miss. Industrial production was a miss. Fixed asset investment was a miss. And so a lot of data coming out of China was a miss over the weekend. It really didn't impact us. I think because the American market isn't really going to do anything until we get the results from the Fed. But we have to be concerned about it, because all of those misses also communicate to us that it's not just us that are slowing down. It's a global concern. And on that note, Goldman Sachs went on to say that we're getting some other data this week. We're getting the retail sales data, and their headline retail sales, they're expecting it to slow. So they believe, actually, we're getting that Tuesday, right? And then we're going to get the Fed data on Wednesday. And they're saying that the Fed won't care about that. He's already laid out his plans for the year, but it will potentially confirm or run against what the Fed does. If it comes out that retail sales have slowed, it could be that when we get a 25 basis point, the market could be angry and say it should have been 50. It should have been 50. Look at how bad retail sales was. Look at how bad China's data is coming in. If it comes out that retail sales has not slowed as much as people are concerned that it will, Goldman Sachs believes it'll slow, then that could show that the Fed was right, and that could give some strength to the market. Largely, I have more fear, and just let's be honest. I've got more reasons to be concerned than I personally have to be greedy right now. We're not supposed to go off emotions, but that is the way I feel. One more commentary. They said that they see a they see lower gas prices and lower auto sales. And that's a huge problem, specifically for Tesla, which is a position that I have and I like. And it was doing fairly well today, even though the rest of big tech was going down. The fact is, I've been hearing all over social media, TikTok and X platform, that there's a glut of cars on the market right now. And so even though lower interest rates should help that, the fact is a slowing economy coming off of cars that nobody could afford and people with crippling debt who spent all their money on their rising rental fees and the rising costs of gas and food, they just don't got money to buy a new car right now. And so Goldman Sachs is cautioning that this retail data that's going to come out is going to show that auto sales are down and gas prices are down. And so that tells me that Tesla has some headwind. So I know it's a mouthful, but let me just break this down. If we're going to be bullish on Tesla, and I'm going to get Ashley's opinion here in a minute. If we're going to be bullish on Tesla, there's only one reason, and it's coming out in October. It's robotaxi, and it's tech AI-driven conversation that's further along, that they put it down the road so they could be ready, not tell us that it's going to be delayed again. So if we get great data here in October, Tesla's going to go like a rocket. But it's not going to be based on increasing car sales. And unfortunately, I don't think it's going to be based on lower interest rates and more affordability, because I think the economy won't necessarily sustain high profit margins for Tesla. What's your opinion, and how are you trading Tesla, Ashley?
So, any potential negative news on Tesla, I see it as a great opportunity to either sell puts or to secure my position. Now, let me tell you why I'm big on Tesla. I am big on Tesla because, in my perspective, it's not just a car company. Maybe that's what it is today, but it's the future of this company that keeps me so jazzed up about the opportunity. It is looking at the robotaxi. I think of myself as a woman that sometimes has to travel independently. I know there's those awkward moments where I have to get in the Uber, and do I talk with the Uber driver or do I just stick to myself? Sometimes I'll fake talking to my husband on the phone just to, cut down any, kind of awkward, dynamics. And so to be able to avoid all that and call up on Elon's, taxis and jump in and it just be me, and I can work and do whatever. I can trade stocks if I want, and just get to my destination safely. Like, I love that thought. And I think there's a lot of people that will like that. And I think that if they have these older vehicles of Teslas, that they can then themselves turn them in to robo taxis, and they'll have an opportunity for passive income. So that'll get these on the road, especially in your larger cities where all of this will be taking place. But then, even more exciting than that, I look to the future of the Tesla robot. And I was thinking about this the other day. We were having this conversation around our dinner table, and some of my children were saying, that's creepy. I wouldn't want a robot in here cooking for us, or washing our clothes. And I said, well, you've got to think about it. Look, it used to be that women would have to scrub their clothes on a washboard and then go hang everything, out to dry. But then the washing machine came along, and like, women were skeptical, like, should we do this? Should we not? And so, times evolve and our lives get easier. And if you think longer term, if we do have a functioning robot that can do some of our household chores, don't you know that every wife in America is going to say, sign me up. I've been a good girl. Give me one of those to help me.
Love it.
With all my chores. So I am looking beyond what is just we're looking at now with electric vehicles and the dynamics around that. And the other thing, Josh, that I think is out there that we are somewhat talking about, but not a lot, in my opinion, we have a gift. And that gift is that we have an election year. And we know that stocks, especially risk stocks like Tesla, they do well when liquidity is in the market. Well, we have a couple of things to infuse liquidity in the market. One, the rate cuts, that'll help. But also, we know that the money printer is in the hands of the current administration. They are not going to risk having a terrible economy going into the election. They would just be handing it over. So the money printer will more than likely fire up and start sending out opportunities for people to then go spend that money on if they've ever wanted a Tesla. Maybe they like what they're hearing about robo-taxis and they want to go get one themselves so they can have passive income. So I'm looking at those dynamics, and I'm thinking even if we go into recession next year, I think we're going to have a good reprieve through November and December.
I loved your overview. You and I see Tesla very similarly, but since you played the bull, I'm going to briefly play the bear and take everybody into the chart and show them the line in the sand of where I will have to either hedge my Tesla swing trade because I don't worry about my retirement Tesla. I'm just going to buy when Tesla gets extremely oversold on the daily time frame. But we're talking some swing here, and I'm going to tell you guys, I am in a swing on Tesla. And I'm going to show you the chart. I'm going to show you the line in the sand. And I'm going to play the bear for a moment. But at the tail end, I'll swing a bullish. Let's go look at that chart real quick. Let's see here. All right, guys. I've showed this to you before. This is for the Tesla holders that are just too bullish. One, we've been in decline on Tesla since November of 2021. Okay, we've made nothing but lower highs ever since then. Okay, nothing but lower highs. Okay, so that's a problem, right? We're coming off a couple significant swing lows. We had the 100, and then we had the 140. And I literally predicted that we would hit 140. And I told you I was going to take a massive position. We ran up all the way back up to 272, but we couldn't close above this previous weekly close. And as a result, we've sold off. Now, here's the bullish side of things. We are clearly making locally, okay, not historically, okay, we are locally making a series of higher lows, right? And locally, we're above the 20 EMA, which is an offensive bullish position, okay? This is an offensive bullish position. It means the bulls are currently steering the boat. And so, I've shown you this chart before, guys. 221 keeps us where we need to be. And currently today we're above it, so I'm not too bullish on my Tesla position. But I think D-Day is coming. D-Day is coming on Tesla, and it's going to be October. It's going to be the robo-taxi event. And personally, I think that you want to be in Tesla running up all the way to that event because I think the market's going to give it the benefit of the doubt. And if he does not come through, then it will be punished. But the market's going to want to take a position in advance. That's just what I think. It's just what I'm doing with my money. But Tesla, if we were to compare it to some other big tech companies or compare it to NVIDIA, and I know people will hate this, Tesla's, it's like NEO. It's been in decline for years, okay? It's underneath a barrier of resistance. We have no reason other than the hopes that Ashley laid out. We have no other reasons than those hopes hinging on Elon's success for this thing to be the breakaway story. But I will go back bullish because I feel my heart pulling me bullish. I will not ever forget Elon. I mean, I don't know what will happen in the coming days, but this man said that he was talking about Tesla being a $13 trillion market cap company. I mean, we're talking 3 trillion has been sort of the big boys all these years that we've been trading. He's talking about a new era, okay, of dominance and Tesla leading the way. And you know what? Autonomous driving robots could easily do it. AI is part of that scenario, and these guys are getting well positioned there. I don't think they're behind the AI story. I think Elon has been ahead of it. I mean, this guy literally dropped the dollars that got ChatGPT off the ground and beyond just an idea. It can be said that he played perhaps the biggest financial role of backing artificial intelligence that's given birth to this whole thing that we've just come through. He backed it financially. He dropped the first $10 billion dollars to get them going. The story goes that they wanted more money. He said no. They got it from Microsoft. And the reason why he said no was philosophical. He believed that artificial intelligence should be nonprofit and should be basically, we need to be careful with it because he saw it as being powerful and dangerous. And so he wanted it to be managed differently, but it broke loose like a stallion. It broke loose like a bull. NVIDIA grabbed at top of the reins, has been holding it ever since 2023, 2024. We've been going nuts. I believe in the artificial intelligence AI story. I hope you guys feel that. All right. Let's get into, Ashley, let's talk crypto for a minute. We've got to talk about crypto. I actually wanted to do a Bitcoin overview. Again, this video will be time-stamped, but Bitcoin's doing some things we have to be paying attention to. And I'm going to take you guys into the Bitcoin chart here in just a second. One, we got rejected at 60K. And that really was kind of expected. I told everybody that the only way the bullish story would continue is if we closed the weekly candle above 60,600. Instead, we got rejected. Now, I read an interesting report over the weekend, Ashley, that was about the sentiment. So there is a positive sentiment versus negative sentiment ratio. And going into the weekend, when we were hitting 60K, positive sentiment was through the roof. And typically, that's bearish, not bullish, okay? Because if everybody gets too bullish and the positive sentiment gets too high, then that's actually a sell signal. So going into the weekend, that was an early sell signal for a lot of people to take profits and to be careful. Now, it was interesting to me, Ashley, that Ethereum had a very bearish negative sentiment. And I haven't been talking much about Ethereum, but I think it's worth saying that if we're going to use the sentiment report to validate Bitcoin, then we have to take into consideration that Ethereum might be getting significantly oversold and could be getting attractive at these levels because bearish sentiment on Ethereum was actually pretty high when Bitcoin's bullish sentiment was high. So FOMO is a trigger determining the top. Now, but there's some underlining data that I want to briefly go through that I think you guys will find interesting. The underlining data is that we have Bitcoin dominance. Now, Tim and I outlined months ago that Bitcoin dominance had to roughly hit 60 for the altcoins and begin to pull back for Bitcoin to climb higher and for the altcoins to begin to take off. Okay, so Bitcoin dominance is something that's an underlining technical, and Open Glass, I think that's the name of their, let me just, CoinGlass, I apologize. CoinGlass reported that Bitcoin dominance hit 57.8, and the price of Bitcoin was higher than it's ever been before. And so that's significant because we're getting very, very close to the potential of a bigger Bitcoin move. And so this pullback from 60K might be the last pullback if the market wants to run bullish. And Ashley mentioned something, and I'll let her elaborate on it, but she talked about liquidity being better for risk assets, Tesla being a risk asset, crypto's a risk asset, and this shift and pivot by the Fed could be ushering in the next phase of the Bitcoin cycle and the altcoin season because of increased liquidity. What do you think about that, Ashley?
You know, I agree wholeheartedly. I had watched someone the other day, and it's escaping me who it is, but he laid out such a great argument for how rate cuts end up pushing their way to Bitcoin and the extra liquidity that comes in the market. That's one of the first things on everyone's want list. I want, or I wished I had more of, and that's where the money goes. And so if you look at the cycle and what we're anticipating, it lines up perfectly. How it's just funny how that works, how the cycles match up with what's happening in the world. But I am a big believer in Bitcoin. I have my Bitcoin that I have 4 children and I have 2.5 Bitcoin. And I got them a lot lower than they are now because I got burned in the first cycle. And then I learned about the cycles and then I knew when to buy. And so I am, going to, this is something I won't take profit. I'll actually hold on for my children's children. And maybe one day they'll say, I had the coolest grandmother ever. She bought Bitcoin when it was, X.
I
And
love it.
so, but I do have 4 children and I only have 2.5. And so I need to even that out because I don't want them fighting when I pass on. So I am actually waiting until the cycle takes its last bow and everything, goes down again to finish out my Bitcoin purchasing. But in the meantime, I am enjoying playing all of the dynamics around Bitcoin. You can sell options on MSTR and get it's the best premium I found for selling options. It's ticker symbol MSTR for MicroStrategy.
That's got
It's
some serious liquidity, man. That premium has to be where it's at because it's high risk.
Well, it is, but it's a leveraged play on Bitcoin.
Yes.
And there's no management fees because it just has turned out that it's the leveraged play on Bitcoin. But if you are like me, like the first rule of selling options, Josh, you have to believe in what you are selling options on. Otherwise, you will work against yourself and you'll lose money.
I love that.
You have to. So if you're of the belief, you're more bold. I am more bold because I'm of the belief that it's going to be doing well, at least in the fall. And so I'm, can get some great premiums and taking the premiums to chip away at my stash to finish out my Bitcoin purchase later.
Did I tell you guys that Ashley has her own YouTube page where she's rolling out with her great smile every day this type of content and education and sharing her own personal financial journey? It's called Investing with Ashley. And I'm going to leave it.
Trading with Ashley.
So sorry. Trading with Ashley. Because, she's an investor at heart, but she's trading some heavy trades too. Trading with Ashley. I'm going to leave a link in the top pinned comment. Guys, I think that there's 1 or 2 of you that didn't hit that like button, and you should. You should. Okay, I'm going to go over the Bitcoin chart, and I want to just share another chart that I talked about the other day, and then we're going to wrap this up. But already I've enjoyed this show. Thank you for joining me, Ashley. If you guys have enjoyed the show, don't delay on hitting that like. I appreciate all the likes I get. The numbers are rolling in. Okay, let's go look at that Bitcoin chart real quick. Let me slide over there. Okay, guys. All right, let's pay attention to this. Okay, so we've been going down and sideways. We peaked here back in March of 2024. We've peaked. We've been steadily moving down. And kind of similar to that Tesla chart, guys, very similar. We've begun to make a series of higher lows in some pretty significant swings down. And we've got this, we're beneath the 20 EMA. That's different than Tesla. Tesla right now is sitting above it. Bitcoin is sitting beneath its 20 EMA. If we get a cross back above it, it would kind of coincide with that 60,600 I've been telling you about, and that would be a bullish signal. As far as technicals go, we need to protect from a move below 56,464. We have to go on sort of a heightened alert if we get there. But let's just say for a minute that none of what I just shared with you matters as much as this next technical. Let me see if I can pull it on. It's the 200-day SMA. Let me see if I can find it here. Okay, here we go. We'll just turn these ones off and we'll use this one as the example. All right, and we'll turn it on. Okay, nope, that's not the right indicator. We're on the weekly chart. Let's jump over to daily. I know what my chart's supposed to look like, and it didn't do it. Okay, guys, so nobody, I want to really underline this statement. Institutional money is the one that's currently buying Bitcoin at these levels. We know that Michael Saylor is the one who dropped, he got $1.1 billion worth of new Bitcoin the other day. Institutions are the ones buying at this level. Retail's not actually been buying very heavily. But here's the go signal for institutions. They're getting in early, okay? The go signal for institutions is this move above the 200-day SMA. That's when it's full green light, full rocket ships. And right now, we have an inverse kind of thing going, right? That's going to coincide with the 200. And I just wanted you guys to be aware of when smart money views the bull run beginning. I'm giving you early signals, talking to you about the 20 EMA, talking to you about these lines in the sand at 60,600. But that's early. Institution is going to call it a full-fledged rally when we get above that 200-day SMA. So that's going to bring our show close to an end, but I'm going to remind you guys of a few things. I'm coming to Chicago specifically. It's Northwest Indiana, right outside Chicagoland with Larry. October 12th, I'm going to be there. I think there is a small fractional ticket price, door entry type thing, but I consider it a free event. I believe I'm dropping easily value at about $500, I would say, in the short segment I'm coming to give. That's what it could cost in the future. Right now, I think Larry's charging $25 for these, but I'm coming to support Larry, and I'm coming to feed and to share and to pour into people, and I don't want you guys to neglect it. Now, right after this, we're going to go into the Stocks with Josh Discord, ChartGoat University, and Ashley and I are just going to have a conversation regarding options, some of the basics for people that are needing to kind of freshen up their options understanding so they could potentially participate in the 3K to 10K challenge. I want you guys to be as prepared as we can so that you guys can begin to actually get onto your journey of really building generational wealth. Because options, you might say, well, options seems too risky for me. There is risk in options, but as you can see, there are one of the ways that people retire, and I'm moving towards that in the course of time, is to simply take less risk by selling options versus buying them. Right now, I'm taking more risk by buying them and watching for the big moves. Ashley's kind of being a little bit more moderate, even though she is a risk taker, by selling them and collecting premiums. Basically, she's an insurance saleswoman on stocks for other people to manage their risk. She's holding her money and she's doling out these basic insurance options, and she's collecting the premiums night and day, and that's what she's living on. That's it. Thank you, Ashley, for being my guest. I hope you guys enjoyed this show. We're going to close this one up, and we're going to head over to the Discord here in about 5 minutes. Appreciate each and every one of you guys. Don't sleep on that like before you head out. Talk to you soon. Thank you, Ashley, for joining me.
Thank you, Josh.
Bye-bye.